Hi guys, welcome to the weekly mentoring video. It's Monday, February 22, 2021. We're trading our $100,000 or fake dollar account, fake paper account. I'm broadcasting to you from Ambato, Ecuador. Still here, still traveling, still moving on. Today we're gonna be doing some special strategies on more cash flow. So pay good attention to what I'm talking about here. And before we go there, of course, I need to show you a little bit of the disclaimer. Informational, education purposes only video, which is general in nature. This is only to educate you about option trading and not to give you any trading advice. You can watch what I'm doing and learn and make your own trading decisions. So if you understand this, again, check. And we can go and I'm going to tell you what we're going to be doing today. So today on WMT, we go for some more cash flow in our portfolio. We have a bunch of positions in the portfolio already and quite a few long-term investments, and mostly in gold and silver. I'm going to add a little bit more investments into the portfolio, and we're going to be talking about income stock, AT&T. They pay around 7% of dividend, and the stock is quite cheap to acquire, which I actually show here on this picture. So TD dividend history, this is just a screenshot from NASDAQ website. You can see that their dividend yield right now is 7.03%, which means annual dividend 2.08 bucks per share. So imagine if you have 100 shares of this company, you will get 200 bucks on your account every year. 100 shares, currently it's trading around $29 per share. So the investment would be 2.9K in order to get 208 bucks every year. It's not bad at all. And imagine if we can invest a little bit more or even reduce the cost of ownership of these shares by selling call and put contracts on it every month. If we could go and reduce the cost of ownership to around 20 bucks per share, wouldn't that be cool? That would be a 10% of return just for free. So every year, and 10% is quite a nice number. I really like it. And if we keep reducing it, we can bring that number even higher. So that's the goal with this. I will also do a condor on McDonald's today and show you how to do a condor for those of you who are new here, and also do one more minor company. So meaning I'm gonna get some shares of KGC, and we'll see how I do it, also at a discount. Maybe I just buy it and then sell calls. We'll see. I just want to see the charts first, but I want more miners, and especially guys who are doing gold and silver. I'm gonna start with actually talking about McDonald's here. Why do I want to have a iron condor? If you've been following my courses and so on, you know that I like sideways trends because that's the best for iron condors and for cash flow. And looks like McDonald's has been stuck in a box for quite a while, and this box is somewhere between, I would say, really, if I was conservative, 225 and around 200 or even 205 more or less, but let's say 200. This was a channel in which it was moving for quite a while. This is still in 2020 here, and 2021 it's been in this channel, and I would like to take advantage of this, simply collect premium for continuation of this channel. I think now price is dropping a little bit, but we're getting closer to 200-day moving average. I expect some sort of bounce and then maybe bounce back, something like this. If we look at some indicators like probability of expiry cone, 68%, I could up this to like 80% just to be extremely cautious and sure that I'm not selling contracts too narrow, in a too narrow scope. I want to put it like this. So if I generate that chart and I'm thinking of promising selling a condor on McDonald's because it's sideways, at which level should I sell if I'm planning 1 month of time ahead? So today is Monday 22nd. I would search for something in March 22nd, around that time. And you see that around 22nd, yes, you see that 80% of the time McDonald's should stay somewhere above 194 bucks, more or less 93 and a half, and 228. Okay, So a very, very safe condor would be, I would say, 225, something like this, even 228 or 230 by 195, okay, and that's what we're gonna attempt to sell and see how much premium we can squeeze off McDonald's. So if I go to trade tab, okay, I see 25 days expiry is actually March 19th, and we look also at the delta. So delta is below 10. 195 has a delta of 13, which is below 15, which I like. That's around 15% of probability of expiry in the money. So I could start there. I'm gonna sell an iron condor. I'm gonna find it on the list, and I'm gonna say, you know what, on the put side I want to do 195 by 192 and a half. I'm gonna try with this first, and then I may extend that bracket to a little bit more risk in this position, maybe 195 by 190, but depending on how much premium I squeeze of this. And on the call side, I said I was looking for something also 225s. You see also 13 delta, 13% of probability of expiring in the money. I like this. So let's do 225s by 227.5. How much premium do I get? Well, first of all, I need to be selling my condor, not buying it. So what is this? Buy, sell a call 225, no, 227, not 207. I made a mistake. 227. Now it's correct condor. So it looks like I get quite decent amount of premium, probably more likely 30, somewhere there. Let's analyze that. I need to disable this trade to see the full picture. So you see that probability of expiry of one standard deviation is well into the scope of the iron condor, and I like it. I'm quite in the middle here. Okay, the price has been dropping, so I would like to have a little bit more room on the put side for this McDonald's condor to move, like so for the asset, underlying asset to move down. So that's what I can do. And if I just maybe reduce this a little bit, because I think it's quite unrealistic to get 34 for this right now, was max premium that I can get for this condor. I can offer 30, so I could receive $300, okay, for the condor, risking only $2,200. So it's, you know, in 29 days or something like this,